Ira Epstein of Linn and Associates with your financial market wrap-up, and I'm doing this on Sunday afternoon, several hours before the opening of the market today, but I want to get this out to you. When we're looking at the metals, what you have to look at for this week, and today is Sunday the 4th of October, is of course the president announcing after the markets closed on Friday that he was going to Walter Reed Hospital, how he's doing. There are so many mixed press reports you can't be sure. Some think he might go back to the White House this week. Others want to see how his oxygen content is doing and so on. The key is, does he get sick or does he get on the road to recovery? And what does that road to recovery mean? The second event of the week that's going to be big. Are we going to make any headway on the COVID relief bill? Ms. Pelosi says that her and Mr. Mnuchin, our Treasury Secretary, who represents the White House, are getting closer. Closer isn't the deal. Does the president getting COVID-19 impact the president's thinking about it? Maybe he says, maybe we can't stick with that 1/6. The problem for the president is he doesn't have that real vote. It's up to the Senate. And the Senate's really digging its heels in, but maybe they'll give ground. Remember, we're now going to be 4 weeks from the election or so. 3 weeks, you're getting very close. Now is the time if they're going to act. The airlines have let people go on to their furlough already. They can call them back, but there's more about to happen. I just read that Regal Cinemas in the U.S., Cineworld is talking of closing them all down now. That doesn't mean that they're going out of business, but there's no point in operating them at the capacity they're getting without any big movies. People just aren't coming. Why get the cost of operation? They'll have to work with their landlords, see what they can do. But generally speaking, a cinema is a major draw to a shopping center. I know because I owned one. And I didn't own a chain. I owned one, a discount movie theater, and got out of that business because I could see people, they just don't spend enough on the concessions to make it worthwhile. But making it go, interesting. So in looking at this, the monthly chart is still bullish. Now, you get into your first correction phase on a monthly basis if on a monthly you closed under 1843. Now, that's $60 from here, and we're only at October 4th. So we'll wait and see what that looks like. On the weekly gold chart, as I told you, I think the big money that looks to come in long-term and thinks that gold's not going, say, back under 1,700 or 1,600, I think they stepped into the market against the 18-week moving average. It is not the way that I teach investing. That is value investing. You're just picking a number and thinking it's got merit to it. Right now, what the market did is it fell to that number, and as I teach in my charting course, when you come off Bollinger Bands and other numbers, and we'll get to those in a minute, and you fall back, it's often the 18-week, 18-day, what depends on the chart you're on, that is the major support zone, and that's what I think took place. Here is a weekly bar chart. When we put the swing line on, they have been in a downtrend. My subscribers to my morning know that I haven't recommended anything in gold since this occurred. I also haven't had a sell signal. So don't think that I wouldn't take a sell if I had it. Why didn't I have a sell? Because when the swing line turned down, you were over the 18-week average of closes. And when that happens, you get the trend down, which is the swing line. You define trend, at least I do, as if it's in a downtrend, lower highs and lower lows. That's what you had. But I believe it should have a filter, maybe more than one filter. One of the filters I use is where is the market in relation on that chart to the 18, if it's a weekly chart, the week moving average, daily, 15-minute bar chart, whatever it is. And that's the number I use. So the first challenge of it often, whether you're coming from a deep break, the market will get back into that. Notice even here, it played with it these 2 days. It tries to figure out from there what to do. I've noticed this for decades of doing charts by hand before computers and so on. Very, very common to see that. So, trend down, again, you close under 1843, that could be very bearish, even on a weekly chart, so you don't need just the monthlies here. When we take a look on this chart at Bollinger Bands, you had gotten up 1, 2, 3 weeks in a row over the Bollinger Band. You know how I talk about that. That gave the market on this week a 2% chance of staying over it. That's all. I count each consecutive week over a Bollinger Band. The word is over, taking away one of the 5% of the time, 1% of that 5% of the time that it will stay over it. It's a rule of thumb. I've seen it go beyond that, but not enough to not make it a solid rule of thumb. Number two, you're not looking to be short here. You're looking to say maybe it's not worth staying on the long side. I've got to have tight stops. That's your way of thinking. Then you got your break. Now the question is, what is it going to do there? I wouldn't be surprised to see it just hanging around here for a little bit. In terms of momentum, momentum is pointing down on the slow stochastics. The bias is up, and I define bias as where the close is to the 18-week average. It's over it, so the bias is up, trend is down. When I come to the gold-silver ratio, we're in a correction mode. We've come here from this roughly the 66 mark up to 78. When I come to silver, it did just what gold did. It corrected down to that 18-week. I had told my traders that I think that those of you that close your eyes and just buy and you want to own this gold and silver, on that week, I came out in my videos to them, the subscriber video, and I said, this is where you do it. You buy with those macro minis. You start loading up in different ways with it. If you're really got a lot of money, you're buying the full-size contracts. It's not my method, but I have to tell people what's going on and what the different types of traders are doing in the market. Copper had a big correction that came out of left field, and the more I'm reading over the weekend, it appears it's because of COVID. Fear. Europe is in the grasp of its comeback. Madrid's in a total shutdown. Italy's going to be shutting down more areas. It just keeps getting worse and worse. And we're already in Brooklyn and the Queens today. Mayor de Blasio said that schools starting Wednesday and businesses closing down. Restaurants, forget it. Queens and Brooklyn, they're closed. 2-week closure may go to a month. Can you imagine the impact this is going to do to restaurants and to the school kids? I mean, it's terrible. So you're coming down with copper because what does it do for the economy? Now, again, all we did is finally get a washout. I frankly was surprised to see copper get this low. It did it. I thought that the 290s were going to be a better support zone. In the platinum market on the weekly chart, a higher high to a lower low and a bounce. Now, the week before you had closed underneath the 18-week, but you didn't have a bearish pattern. Higher high, lower low is not a bear pattern. It's not a bull pattern. And this bounce is still nothing. I just see a market in a state of flux as it's moving back and forth. The dollar index, you've had a short covering rally. Why do I call it a short covering rally? Because you're still under the 18-week average. Therefore, the bias is down. What else could I call it with bias down other than you've got an uptrend? I'll call that the short covering rally. I'll look for resistance at 94.80. Momentum is now, if you will, still pointing gradually sideways to slightly higher. So you put it all together, you come in with ideas, and that's the whole thing that I do here. Those were by the way, the news pages that we have available in our different charting software packages. You know, at 5:40 in the morning, traditionally now, I get up. First, I start at 2, then 4, then I'm up and out of bed, and I'm reading what's going on in Asia. I'm seeing what's going on in Europe. I already know the reports due for the U.S., and I've got everything that I put down there into a PowerPoint for my subscribers. You watching these videos, you're not a subscriber. This is YouTube. This is free. In theory, if you said you're going to watch it all the time, yeah, but my paid subscribers get to see 40 charts, more studies than you're seeing, very specific from a buy here, sell there. Longer term and shorter term. And on the weekend, they see a weekly edition of those charts with long-term trading ideas as well. You're just getting the overview here, but that's the idea here, an overview of what I do. My charts will look like this. I cover all these markets, specific as can be. I cover the major markets. Some people say cover lumber. I can't cover a market where there's not enough open interest. If I put out a trade recommendation, I'm fearful maybe I'm a market mover. I'm not going to play that game, all right? It just doesn't make sense. I've been around this game, as Tom Selleck says, a long time. And I know that when they get to these thin markets, let somebody else do it. You can watch them. But no, for a lot of people, you don't do that. Now get ready for not only this taking place, but you're going to get margin changes soon happening now too. Remember, on my subscriber video, $7.95 for 30 days. You buy a cup of Starbucks, you give a tip to the barista, you're in for more than that for 30 minutes of pleasure maximum. This is 30 days, I hope, of pleasure. Give it a try, you're committing to nothing. I'm Ira Epstein, you have a great day. Talk to you tomorrow.